Hey, welcome back to Everyday Economics. This is the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can check out all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on Wednesday, November 27th, the day before Thanksgiving. And joining me, as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist. Dr. O, your column every Monday at thecentersquare.com looks at the week ahead in economic news, U.S. economic news. Every once in a while, you'll talk about something from outside the U.S., but for the vast majority of the time, it's focused on what's going on right here at home. Interesting week ahead. I mean, we're going to get some job information, some job data, and the number of jobs added, and certainly the unemployment figures from the previous measured period. So, what are you anticipating? What else is on your dance card next week?
So you mentioned the jobs report. I mean, let's be real. I mean, the labor market is slowing, but it's still in pretty good shape. You know, you look at initial unemployment claims, and they've come in lower almost every single week in the month of November. It's the November jobs report. We're going to get the first week of December, so next week. And so, the October numbers were, a bit of a fluke, right? You had the hurricanes that played a role. The labor market is slowing, but still strong. I think that's kind of the big thing. Yes, the number of job openings has come down from roughly 12 million to just 7 million job openings last month. Yes, workers can no longer just quit their jobs to jump into the next newest shiny object. Yes, mobility has slowed down somewhat, but the labor market is holding up just fine. We got some inflation numbers this morning that show income. So the personal consumption expenditures report also has personal income, disposable personal income, the PCE price index, right? All of that just shows income has been supporting consumer spending, and that income, that strong income growth, still very strong income growth, is helping consumers catch up with the struggles of higher inflation over the past couple of years, and basically pay down some debt, kind of get their finances back in order. And that's exactly what's happening. So we got an economy that's far from the brink of recession, I would say, at this point. Yes, some people worry that the momentum is negative, but you're also in the middle of a rate cutting cycle. And so the Fed is doing everything it can to prevent that material slowdown. And essentially, we also got the Fed minutes this week, and the Fed minutes basically shows that every Fed official supports a gradual rate cuts. They'll cut, they'll slow, they'll cut, they'll pause, they'll look around, see if everything's okay, cut again, et cetera, just normalizing policy. So I think we're in good shape. Labor market numbers next week are going to show that. We're also going to have the construction spending. Construction spending is likely to show a bit of a slowdown maybe in construction, in residential construction. We had this big hurricane. We had the hurricanes or all that stuff that affected the October number. So we'll show that it will likely show up in the October numbers. The ISM manufacturing probably remains in in contraction territory. Services continue to expand. This is kind of the whole week ahead. That we're going to get the Fed Beige Book, which kind of looks at it's anecdotal evidence, right? It's interviews, talking to businesses across the different Fed regions. Optimism is on the way up. Consumer confidence is on the way up. Builder confidence is on the way up. Things are looking pretty good. Real GDP second estimate came in today, 2.8% growth, strong, slowing, but still strong, right? And so So this is beautiful. I mean, I wrote this week, the America is still the envy of the world. Um, on top of that, we got the ceasefire now in the Middle East. Just positive things this week.
Yeah.
When I look around.
Well, one of the things that you referenced was the number of available jobs being reduced to 7 million from 12 million.
Yeah.
And I mean, that begs the question: what happened to those 5 million jobs? I mean, obviously they didn't manifest themselves in the October report, when I think we added, what was it, 14,000 total net jobs. Of course, to be fair, I mean, Hurricane Helene did a lot of very specifically did a lot of damage, and Beryl had done damage prior to that across a wide swath of the Southeast. But what happened to those 5 million job
Well, the
opportunities?
7 million job openings, and it's pretty much normal. Before the pandemic, we were hovering every month. We had roughly 7 million jobs that were open,
Yeah,
waiting to get filled, right? And so every month, some of those jobs get filled. Other jobs, some people get laid off. Other new jobs get created, or get new vacancies get created, and so it's just kind of normal. At 7 million jobs in December, let's put it this way: in January 2020, before the pandemic, we had 7.2 million jobs open in the United States, right, on aggregate. And so they are there. Of course, you also have to take into account that there's a bunch of people that are unemployed. The ratio of job openings to unemployed is kind of how tight the labor market is.
hmm
And so the tighter the market is, the more slack there is in the market, meaning the more unemployed they are relative to job openings, the more difficult it is for workers to find a job, right?
yeah,
You still have fewer people that are unemployed than there are job openings. I
right.
think that's the good news.
Well, let's bring it to a close, and thanks again, as always, Dr. Orphe, Divounguy. This has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.